Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with me as always on Wednesdays is David from DeFi University and Jake, who shall not be named. He's here. He is. I
There he is.
always fashionably late. Always fashionably late. Hold on one sec. Oh, you're all.
I get that notification, but also since I'm recording a Loom video, it doesn't send me a notification saying the meeting's starting. So
Oh,
good, man.
my apologies.
Happy you're here, Jake.
I'm glad to be here.
Well, I'm gonna kick this off. First, what I want to do is I actually want to show your guys' socials. Let me kick over to that real quick. Let's see. There we go. Let me share my screen. It wants to be weird. There we go. All right. So here is. Oh, damn it. All right, hold on.
Elon Musk. There's Elon Musk.
Elon Musk.
Joe Rogan Experience.
Yeah, man.
Elon. All right, here we go. Okay, so if you're interested and you want to seek out Jake, he has great content. It's more. Well, actually, you know what? You have quite a bit that goes across the whole spectrum from beginner to advanced. So, but if it's very easily digestible, I think that's what I like most about your channel, Jake, is that it's very easy to watch, very easy. It's bite size. So you can learn a little bit, step away, process, and come back. So, very much enjoy your content. I catch myself, watching your channel quite a bit. And then David over at DeFi University, he just started his YouTube channel. But the thing I want to point out with David is his actual DeFi University. And there's links in the description if you're interested. But it's one of the few that I've found that is, I like to call it entry level, price wise, because it's only $97 a month, but you get so much for that. For that $97, you get daily live calls, hour-long live calls with David and the community, to where you can network, find mentors, ask questions. It's an open forum. I really enjoy getting in on the calls, and I need to start jumping in there a little more often, because I get so busy doing research for shows and stuff, and I end up missing it. But yeah, definitely check out their channels. And then, of course, Metrics Finance. If you are new to DeFi or you're looking for something to help track your portfolio, you can. There's also a link in the description, but it allows you. There's a free version even, but it allows you to just copy and paste your address. You don't even have to connect your wallet. You can copy and paste your address, and it will tell you everything, all the pools that you're in. It will show you, all your positions, both lending and borrowing, and your liquidity pools. And it gives you a whole slew of data that I used to have to use an Excel spreadsheet that I had to do a bunch of tweaking to, and it's still nowhere near what Metrics Finance is. I actually kind of stopped using my spreadsheet because of Metrics, but
we're working on getting everybody there, Mike. Yeah.
Well, no, it is a great.
I wanted to very quickly give a shout out to David, because I get emails now and then, right, that are just saying, how they discovered David's channel. He's been in the space for a while, and it's like it's awesome to see that, that this show is bringing more people to David's stuff. It's bringing people over to my stuff, and obviously we're bringing people over here as well, Mike. So
absolutely
glad to be here.
Hell yeah! Thanks, you guys.
Of course.
Well, all right. And last but not least, this I just launched about a week ago. Me and my brother and a couple of people. It's the DeFi WIZE newsletter. And so every morning, Monday through Friday, I get up at 4 a.m. Taylor's up at 4 a.m. And we put together a lot of really good content, just kind of the news of the day, boil everything that's going on in both traditional and crypto markets, DeFi, all into a 5-10 minute read, something that you can just get up in the morning, drink your coffee, see what's going on in the markets, see if everything is, leaning more bearish, bullish, and whatnot. So, and we actually threw a little teaser in there today about some really cool news that came out. So some people in our community actually brought this to my attention a couple of days ago that there was rumors of Aerodrome and Velodrome merging. And the news came out today that that is indeed the case. So Aerodrome and Velodrome is merging into a unified Aerodex. So it's just going to be called Aero, launching on Ethereum and Circle's Arc. So it's going to be, base chain, Ethereum, and Circle's new chain Arc. And that is huge for Aero holders. So, those of you, hats off to you. Those of you out there that have the locks and that have been stacking Aero, and when it went from $2.20 down to 30 cents, it didn't phase you and you kept stacking. It looks like it's going to pay off for you. So, congratulations.
This
So,
was a
gentlemen,
required play, I would say. It was always too confusing having, velodrome and then aerodrome. And initially, the plan was, I think, a different dex for each chain, and then they're like, hold on a second, that's just too confusing. So then you have aerodrome, which is exclusive to base, but then velodrome starts to deploy on other, chains on the optimistic stack, like move and stuff, I believe. So then it's like, okay, this one's multi, why not just have one? Like, why? What are we doing? And then not to
Aerodrome
mention,
was built by the Velo team.
exactly. So it's like, why have two? And I'm glad that they did this. And honestly, I'm glad they kept the Aero name. Aero is obviously more popular than Velo. But Velo was original. I remember LPing back on Velo back in 2022, I think it was.
Damn.
Like, yeah, we'll buy some Velo token. Lost a boatload of money on it, but
Sorry to hear that.
I don't know what price I bought it. I lost like a couple grand. It's all good, but
Okay.
yeah, I mean, it's cool to see that this industry has just evolved. So.
You know what's super interesting about that, you guys, is the uni token when they're turning on that fee switch. How is Uniswap v4 with hooks going to compete with Slipstream v2 on Aero? That's going to be really interesting to see because there's so much functionality built in. You can do so much with hooks.
Yeah.
What is similar on Aero? Do they have some type of hook functionality in Slipstream v2? I don't know.
Well, I mean, they're doing the development of the new platform, so who knows? They might have a functionality like that. They might not. They might see it as because we were talking about that. I think me and Jake, and I think you were on that episode, David, where we were talking about the potential, malicious potential of hooks.
Yeah.
Got to be cautious. That's for sure.
What I was going to say is their whole thing is like the meta decks, like compounding ecosystem, yada, yada, yada. There's a lot of FUD regarding this uni proposal. So we'll see how that goes. I mean, honestly, I think it's the required move. But again, as soon as you start, like, you can't just share revenue with, like, the simplest business model, buy token, get share of revenue. Like, the simplest, but then your security, so it's like you have to be very careful with that. So they're doing it through buybacks and burns, which works as well. And it's like kind of the loophole of like, oh, we buy the token back, buying pressure makes the price go up. We bought those tokens, now we take them out of circulation, make price go up more, but it's not as good as just running the simplest business model of boom, you're a shareholder, boom, here's your dividend payment or something like that. But yeah.
Yeah, and there's this legislation. Sorry to cut you off there, Mike, but
no, you're fine.
This 155-page bill from the Senate Agricultural Committee to really cement Bitcoin as the digital commodity that it is. I think that's going to be, we need that regulatory clarity because look, you guys, if we're completely honest, like many of the coins, like let's say ETH or Sol or SUI, when you look at them as businesses, as cash flowing businesses, they're not really that great of businesses, man. So what pushes number up? How does number go up? I think it's about adoption. We need the next billion people on chain. And the way to get to adoption like that is probably going to be through these bulge bracket banks like JP Morgan that, today, didn't they just announce today that you can, Yeah,
The
that
JP
JPM
Morgan
token.
coin.
APM token.
Yeah,
Yeah.
they're launching it on Base. Absolutely.
Yeah,
No, and
man.
that's something I've been saying for a while, and it was pure speculation. I had no facts, no data to support it, but I did see the moves being made by Brian Armstrong, by Coinbase. Just having the seat at the table with legislators, and the way that Base network seemed to be purpose built for DeFi and RWAs. That's really where its focus has been. And now, seeing how it's evolving and what's going on. I mean, it just it really does feel like that, base, everything base is going to be geared towards DeFi and RWAs.
Yeah, no doubt about it. But you guys, what happened on October 10th, though? I think that really opened my eyes to the fact that Ethereum and its layer twos are really not ready for prime time. Like, not really.
Yeah.
Real transaction volumes, like the moment ETH moves by 10% in an hour and the chain basically locks up, you can't use it because it's $500 in gas for a swap. Like,
Yeah.
and the layer twos like can't. So I don't know, man.
I mean, have
Oh,
you ever had any
Yeah.
issues with base when when things like that happen? Because
so
I haven't had any.
I don't have any experience swapping on. I didn't swap on October 10th, so I didn't actually swap on October 10th. But I saw the fees, the gas fees to swap. Now, granted, that was on mainnet, not on the base chain. Did
Yeah,
any of you guys swap on base during the crash?
I was able to. Yes.
Okay.
I didn't swap on base during the crash, but I did have reports from a couple of our clients saying the fees were still like I think a couple. It was either a couple pennies or a penny. Like it was not like a lot whatsoever. So it sustained pretty well. Now, what I will say is like a lot of people often. First off, we need to get all of these L1s that are just launching and dying. Get them out of here. Like, what are we doing launching
Yeah.
L1s thinking that like, and it's just a fork of Ethereum with like cheaper gas. Like
Yeah.
what's like Barachain, Sonic, like those will be dead like completely within the next like 6 months, in my opinion, unless something turns around. And it could just be they gain so much hype at the start because airdrops, whatever, points campaigns, new protocols, yield, stuff like that, and they just die out. But Ethereum is Ethereum and its layer twos. That's how I see it. Ethereum is EVM as well. You could think about it like that. It's not necessarily an Ethereum problem because where do institutions that are putting billions of dollars want to go? Well, they'll go to Base, sure, but they first go to Ethereum, because that's where they feel secure. The only reason why they go to Base is because Coinbase backs it basically, and Coinbase is publicly traded multi-billion-dollar institution, if not more than that. But yeah, I mean, it's like when people think, oh, like Ethereum gas fees are high, well, use an L2, use Base, right? Because Ethereum does become an auction house whenever there is a lot of transaction volume. And while you might be making a $10,000 swap and it's saying, hey, you got to pay a $500 gas fee, it's not worth it for you. There's JPMC over here coming in with a $1 billion swap, and they're going to pay that $500 any day of the week. You know what I mean? So it's like we just have to factor that in as well. So
Yeah, I agree with you, Jake. 100%, man. So, but it's really just it's about adoption, right? So, when are we going to get these pieces of legislation passed so that we know what the rules are? We know what's legal. But when is this stuff gonna pass?
That's the $1 million or the $1 trillion question
Mhm.
is because really there's nothing that institutions can do officially, to actually fully launch or fully implement anything until those rules are in place. Because they're hamstringed, until there is those rules of the road for DeFi and for just crypto in general. And they're doing everything they can to kind of front run it, because they see it coming. Everybody knows it's coming, but there's only so much that they can do, currently. So yeah, no, and the reason I think I've been so bullish on base is, really it's been, and I think I've mentioned it to you gentlemen before, is how base seems to be, and Coinbase seems to be doing all the right things to remove the barriers to entry for the average retail person that knows nothing about crypto, that knows nothing about wallets and dexes and all these things that we teach. They're going to potentially put us out of a job. But no, I'm just kidding. There's always going to be things that you're going to need to learn about DeFi and stuff,
Of
but
course.
it's going to remove a lot of those barriers to entry for the average person. They'll be able to put their liquidity on Coinbase. They can already take out loans on Bitcoin. Aerodrome, the new Aero platform, is going to be on. Is going to be on there. The new base app, I actually just got it. Somebody in our community gave me a beta test link for it. So I've been messing around with that and on the socials aspect of it, and it's going to make it so much easier where somebody on their lunch break can be eating their sandwich just with their thumb tapping buttons and
So,
getting
so
in and
Mike,
out.
it launched that new base app because I'm looking at my phone here. I thought that they were about to launch it, or they just did launch it.
No, it's not a full launch, but a couple of people in our community, in my Discord, they got free invites to the beta, and
Gotcha.
so a couple of us, got in on that beta. But it's supposed to be, I want to say, in the next couple of days, it's supposed to launch. I thought it was the 14th or 15th.
I can't wait, man, because some of the social apps that I saw advertised in that base app, dude, that
Yeah,
stuff looks so cool. And,
yeah,
part of the reason why I was so disappointed with the Solana Seeker is that I can see what Coinbase is doing with the base app. And that Solana Seeker phone, man, is like, it didn't feel like it was polished or really ready for prime time. It feels like a burner phone with a built-in hardware wallet. And I thought, like, okay, I'm going to get all of these airdrops, right? No airdrops. Like,
no,
there's no
like
airdrops, and you've got to do all of these different actions to even qualify for the airdrops. So that was a letdown. And then when I take a look at the Solana dApp store, there aren't really any dApps with users there at all. So I'm thinking to myself, all right, well, if I can just download the base app on my Android or iPhone, and if there are actual users on this base app, dude, those social apps are going to be a lot of fun. So
Oh
I'm
yeah.
going to be putting content out on the base app as soon as I possibly can.
and I
Well,
started doing it, and but yeah, the cool thing is you can actually earn,
Right?
if from your posts and stuff, which is really cool. But sorry,
yeah.
Jake, you were saying?
No, you're good. One of the things I wanted to chime in on is like Coinbase is one of the only like centralized entities, because when we think about it, there's kind of different phases in DeFi and it moves to more decentralized over time, right? But when Bitcoin first launched, it's like you didn't have decentralized exchanges or anything like that, but rather you had an exchange that would go buy a chunk of Bitcoin, right, and they go resell it to other customers. And that kind of created Bitcoin markets. Well, it evolved where you have all these, exchanges, centralized exchanges and stuff like that. Then you have decentralized exchanges. And then that's where like you have like free realm, basically. Anybody can create a token and get it listed on a DEX, basically, which is awesome innovation. And Coinbase sees this, right? They're not trying to compete with it. They're trying to build with it, right? That's the reasoning behind Base. It's the reasoning behind supporting decentralized exchanges. And I think there's a day where Coinbase is a DEX, and while I think it's completely ridiculous, the fees that you pay on Coinbase right now, which is about 3% or so,
That's
I think
nuts, man. 3%, Jake? Wow.
3%, yeah,
Ugh.
but
That's
yeah,
why
I mean,
I don't use Coinbase.
I
Because if you buy USDC, last I looked anyway, there was no fees, and
no
then I
fees on USDC for
immediately send it to my wallet.
yeah. I discovered that like a bit over a year ago. I just been ripping that, like because you can bring on USDC no fees. It's easy.
Mm.
You get Coinbase One, yes, but you only have $10,000 per month in trading volume. With fee free. So if you're trading significantly more than that, or you're buying, is it 30K? I thought it was 10K. They must have raised it. Maybe they did. But again, for a large
But Jake, even if it's 30K, it's still nowhere near enough.
yeah, and you pay 1% in spread as well, which 1% versus 5 basis points in DeFi, it's no brainer.
Mm-mm.
Um, but yeah, I mean, a lot of people often overlook that. They think, oh, this is just what it costs to play the game. No, not at all. It's what it costs to be ignorant is what it is.
Yeah.
Not know what you're actually investing into. So yeah, I mean, that's just one of the things that I see Coinbase becoming over time, a more decentralized company. And I'm eager to see how it's going to play out with regulations and with their public entity versus what, DeFi and decentralized stuff they might build later on.
Yeah, man. You know what I'm really interested to see happen is trading volumes move away from Binance and Aster and instead towards like legitimate regulated entities.
Mhm.
I put together a report that I delivered to all the guys in DeFi U earlier today, and all of the things that. Let me just see if I can find it, because we're talking about. Let's see here. One second. I'm just looking for all of the
Take your
things
time,
that
man. No rush.
these traders, the market makers on Binance and many other perps dexes do. Um, but so post FTX, the framework that has been written, that 155-page the Senate Agricultural Committee, that draft bill. Here are some of the prohibited market activities. Okay, tell me if you recognize any of these. Okay, no market manipulation, no wash sales, no price manipulation, no insider trading, and no trade front running. Sounds
Hmm.
like they're outlawing Binance's entire business model. That's what it sounds like. So I don't know, man. I would really like to see that trading volume move to more legitimate entities.
Yeah.
So we'll see.
I think it's going to happen, and I think a lot of it is going to be U.S. based companies. That's another reason why I'm so bullish on Coinbase and things like that. Is it just when when a company is held to standards, if they draft legislation, put it in place, we see it. Is it going to be perfect? Probably not. I mean, we see the same kind of stuff you were just talking about, David, in traditional markets.
Yes.
There's all kinds of insider trading. There's whole websites dedicated to following politicians' trades and
Oh
you know,
yeah, the Pelosi tracker.
yeah.
What are we going to do now that Pelosi is retired?
Oh
Oh,
man.
I want to see if her husband trades as good as he has after she's retired.
It's like, you guys, we laugh about this stuff
Eh,
because like you kind of have to. But
Yeah.
like
exactly.
at the same time, people go to prison for what she's done, man.
Freaking
Like
what's her name? The cooking show lady,
Martha Stewart. Martha
Martha
Stewart.
Stewart, Wesley
Mhm.
Snipes. It's like they freaking all went to like prison for
Yeah.
like for a while for it, and yeah, politicians just do it out in the open.
Yeah,
Yeah.
it should not be accepted like that at all.
No.
Yeah. Well, one of the things I wanted to chime in on regarding Seth's comment, he says move stuff around. Credit union is friendly with Coinbase. Do wish Coinbase was cheaper with buy sell spread. May have missed it, but exactly what Mike was saying, what we teach: buy stable coins on Coinbase. Not stable coins, because USDT they charge you the fee and they charge you the
Yeah.
spread. Buy
US.
USDC on Coinbase because they have a partnership with Circle, because
Mhm.
both are US based companies and both are very large entities. Buy USDC on Coinbase. They'll sell it to you at a 1-to-1 rate with no fees, meaning 10,000 United States dollars gets 10,000 USDC. On the way out, same exact thing, but opposite. Transfer that USDC to your Web3 DeFi wallet, right? You're not going to pay any fee to transfer from Coinbase unless it's Ethereum, and they have batch transfers. So it's even
Mhm.
cheaper than normal Ethereum fees. So it's max you'll pay $2 to $3. And that's in a heavy period of time. And then now that you have that USDC in your
Go to
wallet,
Aerodrome and swap it.
exactly. Not even go to Airdrome. Go to Matcha. Go to Matcha. Go to another Dex aggregator,
Yeah.
and they are going to route you through Aerodrome,
Mhm.
Velodrome, Uniswap, whatever is going to get you the best outcome. And you're going to pay, depend if you're doing altcoins, maybe a little bit more. But if you're doing any blue chip assets that have a multi-billion-dollar market cap, probably about 5 basis points. Sometimes you will even gain a couple basis points because of the the arbitrage opportunities with indexes.
Yep.
Now,
Like on CowSwap.
yeah,
CowSwap will actually
yeah,
pay you to
CowSwap.
swap a lot.
Yeah. One of the things I wanted to say as well, I
Yep.
just finished putting this together, and I want to shill it real quick.
Have at it, man.
We are hosting a live event. We did one of these back in July. We had, I think, 500 RSVPs. We had like 300 people live on the thing. We spent like $20,000 to put this on. We're not doing it as large this time because we had a lot of unnecessary expenses, including one of our team members getting deported from the great United States of
Oh,
America.
you told us about that, man. Yeah.
Oh man,
we're not-
Ice got him. Ice got him.
Yep, down in Houston.
Oh
But
man.
we're not doing it as large this time, but we are doing some awesome stuff, and we do expect to have more people there. Go to defikickstart.com. defikickstart.com. You can RSVP for it. It's a completely free live challenge. There are VIP sessions if you want that, but the challenge is completely free. So yeah, that's what we're doing. It's a live
Dude,
event.
Jake, you look great on DeFi Kickstart, man.
Thank you. Yeah, and we're going to be talking exactly about this, and it's tailored to super beginners, basically, how to get set up in this, how to open your first positions. Most importantly, what we'll be covering in those VIP sessions is how you can potentially save thousands of dollars per year at the very least, depending on how much you're trading, through trading on DEXs. So that goes through the entire process of wallet setup to bringing the capital on Coinbase, to getting the capital onto the wallet, to trading on the DEXs and actually managing there. That's what we're covering in the VIP sessions. In the main sessions, we are covering exactly how to open your first liquidity position. I'm actually going to open some live on the call as well. So DeFiKickstart.com.
Jake, I was just taking a look at DeFi Kickstart. The website looks great, man. So we're talking so much about on-ramping using Coinbase, but I haven't used a centralized exchange to on-ramp in maybe like 18 months. I've been using only Spritz, but Spritz's customer service is horrible. It's so bad. And they're using a new provider now. They're using Rain for on-ramp, and I think they're also using Lead Bank out of Kansas City, Missouri. But they changed their wire transfers. So I used to always just on-ramp with a wire and then receive USDC or USDT immediately, like within the hour, for a 1% fee. So expensive, but for me, the speed made it worth it.
Yeah.
And, Spritz disabled the ability to use wires. And so now I'm stuck using a virtual account as sending ACH. So I've been looking around, man, and I put together a bunch of research on, these different neobanks. So I use EtherFi, and EtherFi, I'm getting a business account there. So that means that once I get that business account, I'll be completely bankless. So I will not be using a traditional bank for anything once I've got a business account at EtherFi. But dude, the on-ramp, off-ramp part, that is still frustrating sometimes if you're looking to avoid using a centralized exchange.
Yeah.
So it's
we use neobanks as well. That will be part of what's covered in those VIP sessions, because what do you call it? We have a team member that's based, he basically travels around, but he's primarily based out of Colombia. And ultimately, he can't just spin up like a Coinbase account out there. So, he's going to head out, or not head out. He's set up his Moonwell account is what he's doing it on. He sends it through WIZE, and it looks like he sent me a screenshot. He wants to buy the dip. He sent money on Monday, and it's going to get over to Moonwell on like Friday. So it's like, again, it's slow, but again, that's the cost you pay for low fees. There are a couple options where you can do faster. Like one of the things is credit card. Here's what I would say. If you're going to get something on because you want to buy a dip, don't buy it on Coinbase. A lot of people like to on-ramp and like, okay, I'm just going to pay the 3% on Coinbase, whatever. And then they pay 3% to buy an asset on Coinbase because of speed. And it's worth it, right? Because you're getting it on a dip. However, an alternative is just use a credit card to buy, because you're going to pay roughly the same fee to purchase, about 3%, buy USDC and get in your DeFi wallet. That way you don't have to worry about having anything on centralized exchanges or even maintaining those accounts. It's easier to do with a credit card. And if you're going to pay 3%, might as well get into your DeFi wallet immediately. So yeah.
And now, what if, Jake? What if you earn 3% cash back on every purchase on your credit card?
I
And
see.
yeah, you see, so then you could buy it, get the 3% cash back, and as long as you're not paying 3% to actually buy the asset, then you get
Yeah.
a nice little spread there just to get in, just to on ramp.
I'm gonna add that to my list of what
Hey,
to cover,
real
David. That's smart.
real quick, Brian Wild had a really good question. Does DeFi hurt you during an actual alt season? Like not as much upside. So Brian, it really depends on what DeFi you're in. So if you're in a liquidity pool, yes, you're not going to get as much price appreciation. If you're in lending, if you're in staking, if you're in something like that, then you're going to get full exposure to price appreciation. So it really just depends on what you're doing. David, Jake, do
Yeah,
you
I
have anything
can.
to
I
add to
can.
that?
I've got actually something to share along
Wait,
those lines, like a system that has been working pretty well for me. Let me go ahead and share my screen, and I call this the Ether Condor. Not because it's similar to an iron condor, but just because I felt like naming it that. So, there are two components, and I use three protocols. I use Uniswap, I use a perpstex. In this case, I'm using GMX, and I use Revert. And so here's how I do this. This is a hedged liquidity provision strategy where I'm earning the fee APR on the CLP plus the funding yield on the short leg over on the perp stacks, which on GMX, to keep a short position open on ETH, I've been getting paid 15 or 20% APY. So, that's pretty darn good. So the 15 or 20% APY plus, right now the yield in this CLP has been phenomenal. I'm getting paid 146% fee APR. Now, granted, my range is roughly 10% wide, so quite narrow. So this is how I've done this. Let me go ahead and bring it on over here to TradingView, and let me
That's what she
just
said.
walk you guys. let me walk you guys through this real quick. So I think you'll like this. So the range here is 3780 on the upside, and on the downside 3320 on the
Okay.
CLP. And so let me just go ahead and remove these other drawn objects so things are not quite as messy here. All right, so I entered this strategy intentionally out of range with 20 ETH in the CLP. So I've got 20 ETH sitting intentionally out of range in the CLP. And the moment that I entered the position on Uniswap on mainnet, I immediately borrowed against the CLP over here on Revert. So I borrowed against the CLP and I took some of what I borrowed and then immediately deposited it over here on GMX as initial margin so that I could initiate the short position. So I've got, I'm plus 20 over here in the CLP on entry and minus 20 over here on GMX on entry. Now I have since added to my short here because I'm a little bit more bearish on ETH directionally, but this is how this works. So since I entered out of range and I was plus 20 in the CLP and minus 20 on the perp stacks, what that means is as long as I treat this like a system and define my exit point on the upside, this is really more of a short strategy. This is a way that I can maintain short ETH deltas and earn a phenomenally high level of yield at the same time. So this works because my market bias is a little bit more bearish on ETH right now. So, since I entered out of range, what that means is if I tell myself I will exit this system at the top of my range, then I can clearly define my max loss at the top of the range. The max loss at the top of the range is essentially my divergence loss less my fee APR from the CLP plus the funding rate yield. So, what that means in practice is as long as I set a stop up here on the perp stacks at the top of the range, and as long as I'm willing to accept that my max loss is, on a $70,000 position, I think the max loss is like not including any fees at all, roughly $5,000. So that means that I'm risking about 7%. But here's the great thing. If I just keep this CLP in range, every day that it's in range, that max loss shrinks until eventually there is no max loss. And if ETH moves just a little bit lower, let's say that ETH is now at 3,100 or so, well then this system becomes just a money printer if ETH moves a little bit lower. So this is something that I've been running here, and to hedge this, I'm long Bitcoin. So I'm long Bitcoin, short ETH. What do you guys think?
I like it. Jinx.
Sweet. So,
Haven't
yeah,
heard
man,
that.
that's
I was going to provide a contrarian strategy to that, because what you're doing here basically is you're taking short direction, as you said, and one of the things that, as you guys know, I like to be long just during the entire bull market, bear market. I'm short the entire bear market, right? I ride things pretty simple just because I have too many things going on to have to keep up with, doing this within the market and keeping up with it. Whereas David, somebody living full time off of DeFi, obviously has the time, which is awesome. So one of the strategies that I like to run, are actually a couple, and I'm just going to spit some game here. First one, do you want to get in? So to answer Brian's question on like the upside of an altcoin, let's say you got let's use Uni token in light of recent news. Let's say you got some Uni token that you want to get into a liquidity pool. You don't want to cap the upside. Well, what you can do is you can take, say you got 20K of Uni token and you got a bunch of ETH though. You could take that ETH, say 50K of ETH, you can borrow USDC against that ETH, right? You can convert that USDC into ETH. And then that gets you long on ETH, increased exposure to ETH, right? Which helps account for if an asset underperforms, don't get me wrong. But more importantly, you can take that ETH and you can put it into a liquidity pool with ETH Uni. Now, this is just one of the methods, and I'll go over the other one in a sec. But you're pairing borrowed, or not borrowed ETH. You're pairing, ETH that you just bought with borrowed USDC with Uni, and then you generate yield. You take that yield, Uni, and you can do what you want with it. You can convert the ETH portion to Uni, which is what I would recommend doing. You could take that Uni, you could go 2-3x leverage on it on a perps platform. So that way, if Uni does start to rip, you're kind of balancing off your divergence loss because you have leverage on perps, and it's lower risk because that leverage on perps is using capital that you earned from the liquidity pool. And then over time, you eventually build up enough of a bag in fees to help outweigh that. And then also in your initial starting point of the position, you'd want to start with more Uni, give it more room to perform. Another approach, you collateralize the ETH, you borrow USDC, and you convert that USDC into the actual altcoin itself. So that way you have a long on the altcoin, and then you pair it with some owned ETH. So you basically do it the opposite, and you can run the same exact strategy. Another one, keep it simple, which is just take ETH, Uni, pair them together, use the earnings to convert all into altcoin, which is what I do because I already have plenty of ETH exposure. Convert all into altcoin, leverage those altcoins again on perps platforms, 2-3x leverage, something safe, something that doesn't have a crazy.
Wait, what'd you say? Safe leverage on a perp dex?
Yeah,
there's no such thing. You know what I mean? I'm just kidding.
There. You're not
Yeah.
expecting a 50% decline, which I guess now we really don't know what to expect. But yeah, and then over time, like eventually just start like pulling that capital back out. And again, this is best done in periods where altcoins aren't moving. Like I've just been these past months, and even past year, just quietly accumulating altcoins by running these strategies because altcoins aren't doing anything right now. Right.
Yeah.
So it's like I can safely be in these LPs, and when I expect alt season to come, well, guess what? I might miss a little bit of upside because of divergence loss at the very beginning of alt season, but that's my indication of okay, time to
Pull it
get
out.
hodling altcoins, right? Pull out, and get ready for alt season.
So let's talk about alt season because that is a super interesting topic of conversation.
It's never coming, David.
I know.
Never gonna happen.
Jake, look, man, I think you were the one that sent me and sent Mike and I that screenshot from a couple of years ago in 2023 where that anonymous user predicted that October 6th would be the top. Well, hey, guess what, man? That anonymous user has been right so far.
Mm-hmm.
So when alt season? Well, what do we need for there to be an alt season? We probably
We need
need
Bitcoin to get back above all-time highs and hold it. Then we need ETH to do the same.
well, yeah, but to do that, don't we need cheap money? Don't we need,
Yeah.
QE
We need
to
the government
restart?
shutdown to go away.
It's
So,
the stars have started
when,
to align.
yeah, well, when are we going to get QE? It looks like quantitative tightening will end in just a couple of weeks. That doesn't necessarily mean that QE restarts. So, did you guys notice that SOFR, and I'm getting deep in the weeds in the financial plumbing stuff here, but did you notice that 2 Fridays ago, the secured overnight funding rate in the reverse repo market exceeded the upper Fed funds rate? And so that has been in 2019 and in September 2024, that has been a significant sign of interbank stress. And the Fed responds to that type of stuff immediately. And what do? They print. And so we've seen the Fed injecting tens of billions of dollars into that facility to get SOFR back down below the upper Fed funds band. So I put together a bunch of research on this that I posted in DeFi University, but it looks like we're on the cusp of QE and like multiple different forms of QE all at once. So we're going to get the government reopening. So the Treasury will be able to legally spend again because they're literally unable to spend. And that has been almost like a siphoning off US dollar liquidity from the system. So the Treasury will be able to spend. And then it looks like in Q2 of next year, we're going to get some type of Fannie Freddie Mae deal. They're going to go public. So that's going to be, added US dollar liquidity. It also looks like the supplemental leverage ratio, that rule or that's going to be removed. So banks, bulge bracket banks, will be able to hold, essentially infinite treasuries with infinite leverage. So that'll be positive too. It looks like I froze there, but so that's QE. Those things are all QE, right? SLR, Fannie and Freddie. TGA being able to spend is not really QE, but uh, SOFR exceeding the Fed funds rate and the Fed stepping in having to print, that is QE. So we might just be, weeks away from, the liquidity tsunami that's required for, Bitcoin to run to 150 and ETH above 5K and, alt season. But I don't know, you guys, like Ben Cowan has been so good at predicting the direction of Bitcoin dominance over the last couple of years. And he's saying, not until December will we start to see alts actually, bottom out against their Bitcoin pairs. So I'm going to continue to go with what Ben Cowan is saying because he's been right, But will we get an alt season, you guys? Do you think so? I mean, it's been a funky cycle. Do you think we're going to actually get a true alt season?
I'm not sure. My initial thought is like this could be the adjustment that the market needed to essentially start to treat these crypto assets like, actual assets as opposed to, because there's a lot of altcoins. They ran and they ran and they ran in previous seasons, but they have no revenue. They have no money, or they have very little money compared to what their market cap is. And I think maybe this is the realization that most people needed, that, oh, like maybe we won't see alt season for all these altcoins because, well, they're already significantly overvalued. Why would we overvalue them more? And you know what I mean? So if anything, like we'll probably see the rise of altcoins that generate revenue and have solid revenue ratios compared to market caps, and inject that or somehow bring that back into the ecosystem. And it looks like it's headed that direction with the recent uni proposal they're doing. I believe this is one of the main reasons why they're doing it, because they want to make sure that their token is valued properly. So yeah, and actually has a reason to remain one of the most prominent tokens.
Well, I've kind of thought. I mean, and I've thought this for a while and been saying it publicly. Probably for a year or two now. I kind of saw the writing on the wall. I mean, when we had a very good idea that Trump was going to get elected, that the SEC lost the case against XRP to where it was not considered a security, which was a huge win for all of crypto. Just all of the regulation that's starting to get drafted. We're moving from a speculative market to a utility market, just like you gentlemen were just saying. Is past cycles, it's all been speculation. There's all these projects out there saying we're building this to solve this pain point, to solve this problem, that problem, and nobody had to have proof of concept. They didn't have to have shit. It was just, hey, this is what we're looking to do, and VCs and everybody threw money at them, and retail was the only ones that could invest in the crypto market. So everybody threw their money in because it was a casino. But now with these institutions coming in, we're seeing how institutions play the game. They're going to play this fiddle, and with this, with the low liquidity and low market cap that crypto has, they're playing it like a fiddle because they're used to dealing with the stock market. To get that thing to move, a couple of percent or a percent is, a lot of liquidity. In the crypto market, they can use play money and throw it around, and we've seen what they do with the markets. Just dumping things, buy it up, let it go back up, and they just windshield wiper and wipe out liquidity. Just all these people that, what's that Win guy that
Oh yeah,
had
James Wynn.
had hundreds of millions of dollars that he's just throwing away because in past cycles, he was a genius. He was like, oh yeah, I'll do this and I'll do this, and
So Mike, have you actually heard him speak, bro?
I have
Like
not. I
he
have
he
not.
sounds he sounds like he got dropped on his head when he was an infant or something, man. Like
Well,
like. But
at his
hey,
yeah.
he was able to make a lot of money, but I don't know, man. I've seen a lot of his posts on X, and it's wild stuff out there, man.
Yeah.
Well, but I mean, my point to all of it is that those days are I feel those days are over. The more regulation we get, the more government involvement, the more institutions that get involved. The rules have changed, and you really do need to seek out these projects that have real utility, real adoption. They have revenue, they're revenue generating. Just you need to do your due diligence. The days of just throwing some liquidity in the crypto markets, and the rising tide lifts all boats. Those days are over. We're about to feel that .com bubble burst that happened during the .coms, where all the ones that didn't do anything went away, and the ones that actually had value stuck around.
So Mike, Jake, when it comes to, the .com bubble analogies here, if we're gonna, maybe shift the conversation to AI a little bit, which I think impacts what we do in DeFi and in crypto, absolutely. Um, I mean, dude, the circular financing for a lot of that AI, a lot of those AI projects, a lot of that AI spend, like, dude, that, like, how can you not look at that and see a big problem? Like, big problem. Like, if OpenAI has $20 billion in revenues, but it's committed to spending $1.3 trillion, like, even when you back that out, yes, a lot of that 1.3 trillion in spend is like vendor financed or financed by their partners. But even when you back it out, it's still like 300 or $400 billion in spending commitments. Dude, like, there's so many assumptions baked into that to get to that point where if anything goes wrong, maybe investors are a little bit out in front of their skis when it comes to this AI trade. Like,
Ooh, a skiing analogy. I like it.
I like it too, man. I like skiing, but like, if Oracle is able to, post during their earnings call a couple of weeks ago that they closed a $300 billion deal with OpenAI to provide services using data centers that don't exist,
Yeah.
using power that doesn't exist,
Yeah.
for OpenAI to pay for these services with money that they don't have. Like, what? Like, make that make sense to me, man. That doesn't make any sense. Like, how is it? And then now they're starting to borrow. Some of these hyperscalers are starting to borrow to invest in these data centers and power generation. Uh, you know, uh, Oracle was the first of them. Meta announced, and they were punished for it on their last earnings call, that they tapped the investment grade bond market to borrow $30 billion. Not all of these companies are going to be able to win. There's going to be a winner, and it won't be everyone. So there's going to be a lot of malinvestment as a result of this. And if you just take a step back and look at it as an outsider, it looks like it's just another massive bubble. Like, you guys, if the power doesn't exist, and if the data centers don't exist, and if these companies are trying to book revenues like over the next 10 years using stuff that isn't real yet, eventually investors are going to say, hey, show me money. Where are the revenues? Like, show me the money. And if that AI trade ever wobbles, man, the S&P is going to have a bad day, because
Well,
you
that's
know
what's propping it up is that Magnificent Seven. Is all those those tech companies, the Nvidia, and all of that.
Yeah.
it's true. It's true. It's 90% of the gains have come from 7 companies over the last couple of years. If they ever
Talk about a
wobble,
bubble.
yeah, man. And the concentration is, when you go back over the last like 200 years to 1830 and looking at S&P data, like, there have been other times where market concentrations have been similar. But it's like you're talking about the railroads from like 1850, when market concentration was like this, or you're talking about the motors from like 1910, 2030, when market concentration was like this, or you're talking about the dot-com bubble in 98, 99, 2000, when things were so concentrated. Each and every time, it's never worked out well. There's always been over allocation and exuberance and a bubble. And what happens after the bubble inflates? It comes back down to earth. So I don't know. I think there are really good reasons to be cautious. And it's going to be super interesting to see what happens to NVIDIA on the 19th when they report. If NVIDIA just rips higher after reporting, well, then we've got the next leg up. But if NVIDIA, gives back and breaks down below support at like 190 after reporting, well, then maybe we're in for a couple months of consolidation and correction on the downside. I think NVIDIA is probably the most important linchpin company in the world right now.
Mm.
Yeah, I agree, David, because like as you're saying, there's no money to back it. It's just all theories. It's all this, that, this is gonna happen, blah, blah, blah. But there's no money there. There's no actual, resources there. It just sounds like how crypto has been traded for the longest time. Nothing to show for it, but it's still gonna go crazy. But then eventually we've seen how that turns out. It's a bubble. So yeah.
Well, I mean, but also when you look at OpenAI's revenues, so granted, they are one of the fastest growing companies in history, period. So that's an amazing accomplishment.
Yeah.
However, the majority of that $20 billion in revenues is like from consumer facing products. And if we know anything about AI and generative AI and all these products, is that they move really, really fast.
Hmm.
So, what happens when a competitor to OpenAI releases a superior consumer facing product and just takes all of OpenAI's customers, because the product is better and cheaper? So, OpenAI's got a problem there. Um, I think they've also got another problem with, Sam Altman, man. Like, did you see the way that he spoke to one of his investors on a call the other day? I think it was on the All In
Oh
podcast.
yeah, that
Dude,
interview. He was
that,
doing
that
that
was,
interview.
that
He's like,
was
I'm
like,
sure I can find somebody who wants your shares. And
who says that, man?
damn,
Like, he was talking to an investor who was asking a legitimate question. And instead of answering the question, he snapped at him and says, do you want your shares or not? And it's like, what type of
yeah,
answer is that, man? Um,
like Yeah, I mean, I saw it. I was watching the All In podcast, and they were talking about it, and they were saying that like that afterwards, that he was trying to be funny or something like that, but it didn't come off as
Not
humor.
at all. Not at all. It came off as defensiveness and
Yeah.
almost like
Well,
anger.
I think he sees everything that you were just saying, David. That they're in a bubble, and he's worried, and
And
so saying stuff, talking about if people should sell their stocks and stuff like that. He was like freaking freaked out a little bit, probably.
well, I don't know, man. But I didn't like the way that he responded to that investor's question at all. I thought it was very inappropriate for him to speak to him that way.
Yeah.
Yeah.
Yeah. So Bitcoin number go up.
Yeah.
No,
Yes.
all
Maybe.
good.
Hopefully.
Maybe.
Well, all right. Well, I mean, any closing thoughts? I mean, we got a couple minutes left, but we can always go over if you want. But you guys got anything else you want to cover before we cut this off?
Just patience and trust the process. It's the main thing, main takeaway.
Yeah.
Yeah, man. I'm looking forward to hopefully a Santa Claus rally. I would really like to see a Santa rally. And I think that, we will know whether there's going to be a Santa rally or not when NVIDIA reports on the 19th. I think that that's probably the thing that we need to get past, the event risk that we need to get past. Um, because the labor market seems to be deteriorating. And I think that that's a case where bad news is actually good news because, Fed Chair Powell has made it pretty clear that, he's going to try to support the labor market by cutting rates. So as we see these job losses, and we're going to get data again now that the government looks like it's going to reopen, but as we start to see job losses, that bad news would actually be good news. So remember, you guys, after the last FOMC meeting, there was some uncertainty about the December 25 basis point rate cut. And now that it looks like the CPI data, it looks like it's probably going to come in pretty cool. And those job losses look like they're accelerating. Well, that just means more rate cuts. So markets don't really care about Main Street stuff. Markets care about more cowbell, right? So, rate cuts.
You know what this
Yeah.
market needs? More
Well,
cowbell.
yeah, man. That's one of the reasons why I like CowSwap, because whenever I swap on CowSwap, I hear a little cow. It goes moo and stuff, man. I think it's great. But no, I mean, if Tom Lee is right, then we've got another couple points to the upside into the end of the year. If Nvidia reports a healthy number, then maybe we see the S&P just continue to melt up into the end of the year. And hey, if Bitcoin can finally find its legs and find support, maybe we'll see Bitcoin run higher too. So
Me personally, I mean, really all I'm doing is, same thing that I do with my liquidity pools is I only hold assets that I strongly believe in, and we all do to an extent, but I look at everything through a lens like a traditional investment. I look at, all the deep dives that me and Jeff do on the show. We look at the team, who's at the helm, who's the CEO, who's the CTO, what is their backgrounds? Have they been successful, in their past endeavors? Are they, what use case or, what pain point are they addressing? All those things that if I was, to walk into a boardroom and they were asking me to invest my money, what are the questions that I would ask? That's how I try to treat, my crypto investments. It's, I don't go after hype. I don't go after, what's trending in socials or, what's getting the most attention. Usually by the time something's getting all the attention, you're buying the top. So, you have to put in the work. And so, I mean, that's pretty much what I'm doing. And then just, kind of like what Jake is doing is, using parts of my bags to just stack more assets. I'm not looking to take any liquidity out to live off of or anything. I'm fine financially. I have no bills. I'm retired. So I'm just letting it all roll back in. And yeah, it's, I'm sure not all of my picks are going to pay off, but if even two or three of them pay off, it's going to be a nice payday. So that's really all we can do, is just, you really have to treat this, like what it is. You're putting your hard-earned money into this. You're going to get out of it what you put into it. The effort, the knowledge, and back to our kind of our point with DeFi University and Metrics Finance, is you need to arm yourself with the tools for success. It's if can you learn the things that you can learn in DeFi University on your own? Yeah, through a lot of trial and error and mistakes. I mean, I know I did it, and but can you fast track? Is it worth $97 a month to fast track yourself to just bypass all BS and get to a place of success? There's no excuse to not use Metrics Finance. They have, it has a free version. Yeah. So start using that. And if your portfolio gets to a point to where it's like $10,000 or over is what Jake likes to say, then you'll be in a position to where it's saving you more money than it's costing you, because it's optimizing your positions and ensuring that you stay profitable, in the time it saves. So anyway, I appreciate it, gentlemen. What's that?
I was going to say, to chime in on that, Mike, one of the things I like to say is don't pay the ignorance tax. The ignorance tax is not knowing what you don't know, right? Like you are diving into, like, one of the benefits of centralized exchanges is at least these assets have been somewhat vetted. Now there's a argument to be made for the meme coins they list because they want to get a cash grab. Yeah. But some of these assets have been pretty vetted. Whereas when you invest into, DeFi and these primary markets, you could call them, it's like you're just exposing yourself to a complete sea of more ways to lose money. You know what I mean? So not having guidance, whether it's through DeFi University, Builder Wealth, any other company out there, you're bound to lose some money. So set aside a budget for losing money, and most importantly, don't invest everything that you plan to invest up front. Lose money on small amounts of capital and make it seem like it was a large amount of capital, right? Over exaggerate the money that you lost. That way you actually learn your lesson. You need to let it sting, but don't let it kill you. And then also regarding Metrics Finance, Mike, I appreciate the shout out. We're investing heavily into production. We're bringing on UI designers. We just brought another full-time developer, bring on another guy. We just lost one of our part-time guys for some busy stuff that he just has going on in his life. So we're bringing on another part-time developer, which is cool. And I've been just trying to put out the greatest content, just like everybody else here. So.
Hey, did you guys see that the McRib is back?
I did.
Yes. Yeah.
Everybody
the McRib indicator, man.
Everybody on crypto YouTube's talking about it, that it aligns with with the markets, and I don't know, some of the channels with the charts and stuff like that. It really does feel like male astrology. It's like, if this star aligns with this and the McRib comes back, then we're going to get a bull market. So
sentiment is kind of in the toilet right now. If the best you can see on Crypto X is that, hey, the McRib is back, so we're going to rally. So we'll see what happens.
Yeah, absolutely. Well, gentlemen, I appreciate you, and we'll see you next Wednesday. Till next time,
later.
Veteran Crypto out.
See you guys. Peace.